Good afternoon, everyone. It's 2:45 here in the UK. Magnificent sunny day, as you can see from my computer, 27 degrees C. And the weather's been magnificent for the last, 2, 3 weeks. Unfortunately, I haven't seen much of it, and the reason I didn't post one of these last week is that I haven't been in the best of form, folks. So a little bit off the ball. As you can see, the front page of VectorVest hasn't looked as good in many a long day. We have an up situation, a confirmed up. That confirmed up has been in place now for a week and a bit. The medium-term market timing system, the DEW, is also up a few days earlier than this. And VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. All right, so that's been good. The buy-sell ratio has moved up very strongly over the last 2 sessions. It's a non-linear beast, and as you can see, it's moved up from 1.4 to 1.55 already today. The MTI moved up from 1.3 to 1.36 today. So there's plenty of room on the upside in these metrics. I'm told by the research people in North Carolina that the buy-sell ratio in the US can get up to 4 before it's considered as a mega overbought position. So a long way to go, and hopefully for many of us there's a few bob to be made. So let's start and look around the markets. And let's start where we always start, is the VectorVest Composite, an equally weighted index of all of the shares that we follow on the American market. That's over the last year, and I've in fact included the VectorVest proprietary buy-sell ratio, the number of shares in the buy divided by the number of shares in the sell, and the proprietary market timing indicator. Okay, as you can see, we're still in this bigger range, but at least we've broken out of this small little range northwards over the last day or two. And as you can see, the buy-sell ratio finally, after months grinding away in an oversold situation, breaking upwards above 1. So a pretty good situation. So let's look at the longest term measure of the trend, the confirmed calls. The confirmed calls have done a darn good job, folks, in dealing with an exceptionally difficult market here. And that confirmed call has been up over the last week or so. So that looks quite good. The medium-term market timing system, the DEW, when the market went into this tight range, it got whipsawed a bit. But in this period, when the ranges were bigger, it did also a very good job, but it got whipsawed here. I think if you are a short-term trader, a shortish-term trader, they say the only 2 realities are death and taxes. But if you're a short-term trader, you can add 1 to that. That's called death, taxes, and whipsaw. But we've pulled out of that at the minute. Let's have a look at where I think we're going to run to. I'm going to look for that to my dear friend, the SPX. There's the SPX, folks. It's the S&P 500. I trade it for a living, so I know the numbers. They're engraved on every bit of me. We're moving up very strongly here. Let's look at some potential resistance points where we could see a little bit of a pullback within a trend. Remember, markets don't rise in straight lines, folks. They rise in a series of steps. Although, my word, it's going great guns at the moment. So if we put on the Fibonacci tool, which, as you know, I'm very fond of, and many people remark I don't pronounce correctly, it's ATYM, but that ATYM doesn't roll off my tongue that easily. So as you can see, it went through the 62% retracement, and it's always so difficult, folks, to get the fibs correct to the tick when you've got a big spike, because many of the market makers will have a look at that spike, and they will, using a tool called Market Profile, they will say that the bit of that spike, in fact, just wasn't significant. So I think that the 62% retracement caused this. Plus, we've got this old top here, and as you can see, we've now pulled up and we've made 52-week highs in this market. Where's it going to go to? Well, certainly the next point on the chart is this level, and that level's at 4538. One of our subscribers, in fact, in the UK market on Monday afternoon, reckoned the market was going to 45 plus, and well done to you, sir. You seem to have called that perfectly. If we actually put a fib here on this last pullback, it gets up to about the same area, and that gets up to about 450. So somewhere up around that area, I think we'll get a little bit of a headwind, maybe similar to this one here, where we in fact pull back for a day or two. But that's the future for the moment. And this is a big day. This is the Fed day. A pause is widely expected. Let the economists in your daily newspapers and wherever you get your information comment on that. A pause is widely expected. We shall see that's coming out at what 2 p.m. Eastern time. And then what's really more important will be the Powell's talk at that's coming out at 2:30 Eastern time, 7:30 UK time. So an exceptionally good time, folks. Many people will point out that I think on Monday afternoon, some of our members pointed out that the markets were held up at what they called the Magnificent Seven stocks that have pushed this up. Nevertheless, if we go back to the front page of VectorVest, the breadth of the market is increasing steadily, so it's not just those 7 anymore, folks. Many companies have turned from a sell recommendation to a hold to a buy over the last day or two. So the breadth of this move is growing and growing strongly by the day, and it's growing strongly since yesterday. So reasonably good situation to be in. What have I been doing? Well, as I say, I was in hospital. That's last Friday. Came out of hospital last Friday, and there was a fib level there, and I felt this market was going to pull back, and it did. And I sold it underneath that low and made 14 points. Then all of a sudden, I watched it move up here in this rising wedge, and I was tempted to short it at the point of the rising wedge, but didn't, because it was still above the 21E moving average, which I like to take most of my trades in sync with the 21E moving average of the 5-minute chart. And then all of a sudden it discarded the rising wedge, and I know from bitter experience that a rising wedge that doesn't work in fact precipitates a very big move against the direction of the rising wedge. The rising wedge is a bearish pattern. When it fails, the market tends to, as we say in London, leg it the other way. So I went long there and made another 14 points there. This is yesterday. Pulled back in a little bit of a bull flag. I bought somewhere about there and chickened out at that high because that was lunchtime in America, and I felt that it wasn't going to break, and haven't entered again as yet. Probably should have been in at 4,370 this afternoon, but I haven't done anything as yet. So would have been much easier to have bought the damn thing down there and just let it sit, but I'm not unhappy with my efforts because I've made steady, consistent money, and that's my objective. There's another market that I'm looking at. Looking at the gold market at the moment. I haven't done anything yet, but let's look at the rationale of the trade. It's a rationale that I use both on all markets intraday. If we have a look at the daily chart in gold, you have to bear with me while I clear the debris off the chart here. I've been saying to the VectorVest people in the UK that I believe that this is an impulse wave, and we've got a corrective wave here. and that we've got another leg down in this wave. That is my belief. So I believe that we're going to have something like this. And this is on VectorVest is so easy because the trend line keeps staying like this and like this. That's what I think is going to happen, folks, somewhere down around here. So I've been looking for any reason today and yesterday, in fact, to short this market because we've got a nice little triangle in here. It can keep going forever, but nevertheless, I'm looking at it at the moment. I haven't done anything yet. And if we now go to the hourly chart and get rid of all these bloody lines, gotta hit crowded charts. They give me the creeps. And there's that range that we've been in, that little triangle. Doesn't look quite as pretty. There's the triangle there. And I noted earlier, I've been looking at most of the UK morning, that if you look at this, that's an exact 62% retracement that stopped it. And we've moved up in 3 waves here, A, B, and C. I think that if the move up had been like this, a corrective move, creeping up, I would have shorted the level. But the momentum here in this last wave up was so strong. My experience tells me that if you get a big, strong bar momentum like that on any time frame, it takes 3 bars at least to relieve that momentum. But nevertheless, maybe I'm going to be unhappy that I didn't short the level. I haven't shorted it yet. It looks to me we've got 4 minutes to go before this is over. That'll be an inside bar. If it breaks down below the low of the inside bar, that would be at 1955. Then I think that's a short. So that's something I'll be looking at for the rest of the afternoon. My friend Larry Pacevitis reckons that an $8 stop in gold is optimal if you're looking at this type of chart. Clearly a daily chart it wouldn't be, but if you're looking at intraday chart, and that would put the stop loss. Stop loss has to be, in fact, judged against the level, not where you got in, but we're at the fib level itself. That's 58. 8 would take us up to 66, which is somewhere up around there. So that's an $8 stop. It's going to be a bit more if I get in at 54 rather than getting in at 58. But I shall risk a couple of £100 in that. Won't kill me if I'm wrong. As you know, my objective is to try and get in at the extremes where the risk is lowest and the profit potential is highest. That goes right across everything I do. And frequently, I will be, in fact, I had this discussion with one of our members from Birmingham this morning. He was talking about a head and shoulders reversal on an investment trust called BlackRock Gold Minerals. And I, in fact, I'm frequently buying where all the head and shoulders people are selling. They're selling the breakout, but I'm actually buying at that level. And in fact, I maybe illustrate that if I get a second. Now, this is going to be another couple of minutes and this bar is over. One market that's in fact found a great deal of press coverage this week, and I'm going to go to the UK market for it. The UK market looking very similar to the US, folks. Maybe not quite as strong, but certainly looking similar to the US. Mining stocks today have had a cracking time. Anglos, Glencore, etc., BHP, all well up indeed. There's been a great deal of rhetoric about copper. And Citibank yesterday or the day before put out a note that copper is going to be in serious short supply over the next year or two. This gels with what my pet commodity analyst tells me. But these guys, remember, folks, take a 10 to 15-year view. They're not particularly interested in what's going to happen in between. And they don't trade themselves. They just generate long and tedious reports. If And I go to viewers here, and where am I now, David? Watch list. I go to commodities and have a look at the copper price. Now, I'm just pulling up an exchange-traded fund on copper prices called COPA. It's a UK exchange-traded fund that follows the copper price pretty much exactly. And this is a thing, clearly there's no valuation because it's an exchange-traded fund, no earnings. What we've got here is, let's start with the 5-year view. This is the 5-year view of copper, and as you can see, I'm very pleased to say that our UK members have in fact got all of this. Many of them got out here and have got back in again. I've held it right through because it's in a holding which is very difficult to trade in, which is sort of capped for my 2 boys. As you can see, this is pulled back now in 3 waves, and it stopped exactly at my favorite number. Well, it's not my favorite number. 78.6 is my favorite number, but 62%. It stopped there. You can see the tail on the candle there where it was accumulated. We've now had 3 weeks up. I think there's a flashy name for that in Japanese candlestick patterns. So it looks to me as if the copper market is, in fact, finding a bottom here. So those of you that are in the US market, have a look at copper miners. In the UK, in my own portfolio, I've got BlackRock World Minerals, which is an investment trust which has got holdings in all the large usual suspects. And I've also got a small Spanish copper miner called Italia Mining, which is on the cusp of breaking out for a big move. It hasn't broken yet, but I'm very comfortable with the stock. It's well up today. So this looks to me as if this can break up. So have a look for some copper miners, folks. This is a very strong chart. And on that BlackRock World Mining stock that I've got, I had some really good, it's on the dividend yield of 7.2. I had some great dividends come in the other day, and I bought just spent the dividends on more stock. So have a look at copper miners. So let's go back to the front page of VectorVest. I'm very gung-ho on commodities, folks. Very gung-ho on commodities. If you look at a chart, do yourself a chart of the S&P 500 against the Goldman Sachs Commodity Index, and you can see that it's on its knees. And if you look at, if you've got the ability to look back 50 years, you'll see that it's in an oversold position. And every time it's been in that oversold position, we've had a renaissance in commodity stocks. So I think that the risk in commodity stocks are relatively low, and we're going to need one hell of a lot of copper over the next few years. That's certainly what the analysts are talking about. So if I now go back to the front page of VectorVest, we can see we're up 8 ticks on the day. Clearly nothing's going to happen this morning, famous last words, until Mr. Powell speaks. I would have thought it's going to be really noisy around the number, I would have thought. And clearly, if a pause didn't happen, there would be a sizable move, that's for sure. So I think that the US markets look good for a run up. I think we'll see some form of hesitation around that 4-5 level, but the momentum is very strong to the upside. I think all you've got to do is to watch the color guard on VectorVest. It'll tell you exactly what to do. So good trading, everyone. My apologies again that I wasn't available last week. I'm hoping that this bout of illness is behind me, but there may be other weeks where I'm out of commission. So please bear with me. Thanks very much indeed. Bye-bye.